All right, everyone, welcome to the call. This is our Six Figures call. Today is August 27th. I'm going to start with our disclaimer. Let me share screens. All right, here is our disclaimer. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, it's not indicative of future results. All right, that's the disclaimer.
Excellent. So both of you, we've set up our barchart.com. You have a username and password, correct?
Yeah.
Okay, excellent. So that's the first place you start, is you sign up with barchart.com and you get a free account, because you can get an account that you pay for, but it took me a year and a half of doing this before I did that. Because after you use it for a while, then the pop-ups get really aggressive. And you can hardly look at the chart for 2 seconds before it keeps popping up or popping up. But when you first start, for a good year and a half, you get a pop-up every now and then. And, but I think they have some type of an algorithm to figure out the people that have been on consistently for a season, and to get you to pay, I think it's like probably $7 or something. Yeah, it's either $7 a month or $7 per month. I don't remember how much I paid. I just know it was nominal not to have those pop-ups just, really just hitting me every 2 seconds. It was just too much. But for right now, you guys are able to hit the X on the pop-up and enjoy the journey of learning without paying for it when you first start.
Yeah.
So Barbara, you're gonna pull up
My bar chart, yes.
Okay.
Can everybody see my screen? Okay.
Yeah.
All right. So you want to go ahead and you want me to start, or you want to start?
You can go ahead and start.
Okay.
They need to know how to set up the watch list, and you're real good at explaining that.
Okay. All right. So when you first come into Barchart, it's going to look like this. This is going to be your home screen. And of course, we're going to go right here to futures. And if you do, just double click on it. And then it's going to show you the different markets that you can get contracts in and trade. If you click this button where it says full list, it's going to pull all the markets for you right here across. And if you scroll down, you will see all the different markets right here. And the good thing about Barchart, there's several areas where you can do the same thing. Like you're able to make a watch list from different places within Barchart. You're able to set alerts from different screens within Barchart. So Barchart is very robust, but it allows you that capability where you're able to do that. So I'm just going to click on a market. And I'm going to choose crude oil.
Yep, click crude oil right there. That's perfect.
Crude oil. Okay. So when you click here, it gives you all of the months that you can trade for crude oil. As you can see, it goes all the way to December 2031, all the way from October 23. So also on this screen, you get to see the last price, the change in price, where it opened at, the most recent high, the most recent low, its previous price, volume, and open interest, which is very, very important. You get to see that. We'll discuss that later on. And then over here, there's a tab for links. Just like I said, in Barchart, there's several places where you can accomplish the same goal. And this is one of them. It will allow you to, if you click here, you can add October 23 to your watch list, or you can make an alert as well. So I'm just going to click here and go the long way so everybody can see it from start to finish. So I'm going to click on October. It's going to take me to the page for October crude oil. And then I'm going to go into the full chart to see the bigger picture of the chart. Of course, if you scroll down, this is your contract specifications. We'll come back to that. We're going to get more into how to do your watch list. So I'm going to click right here, full chart. And when I do, it's going to take me to crude oil October. So if I want to add this to my watch list, if you look up top where it says my chart alerts, this little orange symbol, question, exclamation point, and then watch with the stars right by it, right next to it. This is where I usually add contracts to my watch list, is from this main screen right here. So if I click here, I have several watch lists already made. Of course, if you want to do a brand new watch list, you would click new watch list, and then you're going to name it. You'll name it and click OK. And then it's going to automatically add that to it. And once you do that, if you look up top across, says mine is Barchart Plus, click right here at watch list, and it's going to take you to your actual watch list screen right here. And it's only going to predominantly show you one at a time. But if you see right here, I have one that's named minis and micros. So if you click this drop down, these are all the watch lists that you've named. So if I just named this one, I click fave more, it's going to show me that I just added that crude oil to fave more. And of course, if you want to remove it, you click these three little dots right here under the tab that says links, and just click delete from my watch list, because of course the contracts only last for so long and they get old. Whatever you add to it, it just stays there, and you have to come and manually, physically remove it. So I'll hit delete. Well, you must have at least more than one symbol to delete it, because it would delete out the watch list. So if I add something else here, I can come and delete this one off. So that's how you do your watch list. And like I said, there's several places that you can add something to your watch list. As you look right here, watch list is right here. It's on the previous screen. I can add it here from this screen if I want to, or if I can go right here back to the main chart and add watch list there. So that's how you do a watch list. Did you both see that? Any questions about how to add a watch list or create a watch list?
No, that's fine. I've got it.
Okay. All right, thank you. All right, do you want to do alerts next, Dr. Melvin?
Yeah, let's do, well, actually, let's do alerts, since we're on the watch list and alerts. Yeah, let's do alerts. And then we'll start doing the charts for 50%.
Okay.
And marking up the 1, 2, 3 tops and bottoms.
Okay, so if you notice right beside watch, you have the word alerts. And this is vital for you getting in the market and even wanting to get out of the market. So say, for instance, if you have your 1, 2, and 3, but you're waiting for the 3 to retest the number 2. So you want to say, well, I want to get in the market when price gets at 77.88. That's when I want to get into the market. So you would come here and click alert. And if you already have one here, you can click delete and delete it out. It's only going to allow you to do one alert at a time, but there's no alerts here. So I would click the plus alerts, and it wants to know, do you want the last price to be greater than your number that you're putting here or less than? So let's just say I want 77.88. I want to know when it's this or less than, because I want to go short in the market. So I want to know that. And you can put a note here. You want to leave it intraday so that, the frequency is all day instead of at the end of the trading day. It's defaulted for intraday anyway. You can put a note here to yourself so you can kind of keep up, because you look at so many markets. I always put little notes here so I can keep up with what's going on with this trade. And I'll say waiting for it to retest number 2, to enter trade, to go short. And then that's my note, and I click save, and it's
So,
done.
sorry, so intraday stands for all day.
Right, that's all throughout the day. And that's what you want your alerts to do, because you can miss something. What if you set it for end of the day? It's only gonna alert you at the end of the trading day. And
Okay.
it could have went to that number and you could have missed your opportunity to get in. But if it's set an intraday, it's gonna do it constantly throughout that day for you.
Okay.
And so that will be your alerts. So if you come here and you click tools, right here next to news, and then right before learn, if you click tools, you can get back to your alert center from here. So just click alert. Remember, I said there's several places within Barchart that you can get to the same tab. And if you click on your tools, you also can get to your watch lists as well. So you want to click alert center, and it's going to show you all the alerts that you have set in all the different markets. You can find that from here.
And hold that thought, Barbara. In this section right here, this part is really important because as you spend time setting alerts, there's only so many alerts that Barchart will allow you to set. And then you'll get to a point where you set an alert and it won't stick. It'll keep clicking off and you're like, what's wrong? You know? And so I had to learn that I had to go into this setting right here and clean up all the alerts that had already triggered that I did not delete, so that Barchart resets itself to allow you to continue to set alerts.
Yeah.
Okay, so remember this section right here, because you will get to a point when you keep setting these alerts that you'll run out of alerts and you have to come clean up this section to keep setting alerts, okay?
Okay, thank you.
Right. So if you just click here, it's gonna highlight it and just do delete. And that's how you can get rid of it. And then it'll give you room to put more alerts. So
Okay.
just so you, okay, all right. And so now we'll go back to the chart.
Can you go back to that that contract page with the different deals? Let's go over that with them. So we don't forget.
Right here?
Yeah.
Okay.
Yeah, so we went over this page before with you briefly, but one of the things I want to point out that Mr. Wright pointed out to us, why this page is really important in how you choose which contract that you'd like to trade in is based upon the liquidity of the contract. Because you know, you want to be able to get in your trade and get out of your trade at whenever you want to get in and get out as easy as possible. And so looking at the volume and the open interest in this section here for each one of the markets is really important. And so you want to choose a contract that has the greatest amount of volume and open interest. Okay. So right now, in this crude oil micro, October 23 has the greatest amount of volume and open interest. And so therefore, this is the contract. If you're going to trade this market, you want to choose October 23 because it has the greatest liquidity at the moment. Okay. So although sometimes you would like, well, I want to do it like 2-3 months from now because I don't think this trade is going to happen within the next 2-3 weeks. You know, sometimes you look at the expiration date of the contract and you're like, oh, it's only like 3 weeks. This trade's going to take longer than that, you know, and you might be tempted to choose, you know, like December. But it may not be wise, because if the trade doesn't go the way you want it to go and you want to get out, you may not have the liquidity in December, and then you're stuck in a trade because nobody wants to buy because it's not liquid enough to get out of it.
Yeah.
Do you understand?
Yeah.
Yeah, so pay attention to this page based upon, you know, when you go to a market that you want to trade, you look at this page to see which contract month has the greatest liquidity, and then you choose that contract month, and then you work up the chart for that month with the 50% and, you know, the different trend lines to see whether or not it's a trade that you would like to get into. Okay, Bart.
So
So,
would I be able to go to November as well then?
excuse me?
Because that's quite high. Would I then look at November as well? Because that's quite high.
I would look at November if it's higher than October. Like go to corn,
Okay.
Barbara, go to corn so they can see corn.
Okay.
Corn will
So
help them.
just always go for the highest one, basically.
Yes.
And
That's-
that can I just ask a quick question? So that's that in the list that you showed, the highest liquidity tends to be number 1, 2, 3. That tends to be what you're looking for. Or would that not necessarily be so?
The highest liquidity, explain the 1, 2, 3. I didn't understand that part of the
So,
question.
sorry, before Barbara just moved from that list, you were looking at, was it November corn? October
No,
corn?
it was
October.
October micro.
Let me go
micro-
back to,
Yeah.
so we can see it. There we go.
So are you generally just looking at the first, I don't know, 1, 2, 3, and 4 in the row? Do
Oh,
we
you're
have to go
talking about-
down?
If I'm looking at October 23, November 23, and December 23, that's what
Yeah.
you by 1, 2, 3?
Yeah.
Not
When you're talking about the
necessarily.
volume or liquidity.
Nope. It has
No,
to do
okay.
with the volume and the open interest.
Okay.
Has nothing to do with whether it's 1, 2, 3 as far as October, November, December, January. Because that's why I
So-
said to Barbara, go to corn.
Yeah. So
If you
this just
go-
happens to be 1, 2, 3, which has the highest volume and the highest
Correct.
liquidity. Okay.
Yes, absolutely. Yeah,
Okay.
they're not all like that. That's why
Yeah.
you're just paying attention to volume and open interest because they vary. Some months, 3 months from now, it explodes. You have hundreds of thousands of volume and open interest. And the front month you're in has like 3 and 200. It makes no sense. But,
Okay.
it depends on the market. It depends on, like, what's the term, like, not only the market, but there are different factors that play into certain times of the year that certain commodities perform in a certain way. And so you learn each commodity Barbara and I say, has a personality. And we learn the personality of the ones that we enjoy and the others that we don't, we are like, nah, I don't like the personality of that one. And so we don't spend any time with it. And so you'll see what I'm talking about as you guys start to play around more with looking at the charts, doing your 1, 2, 3 tops, 1, 2, 3 bottoms, doing your 50%. You'll start to see the ones that you like and the ones that look like they're going to steal your money, the way they come down and hit your number 2 and then turn around. Like OJ, you know how I've been complaining about OJ.
Yeah.
OJ is weird. It wasn't like that in the beginning when I was crowned the queen of OJ in the group. It functioned normal, but ever since the hurricane in Florida last year, OJ has just totally been so sporadic and there's no rhyme or reason of how it functions, and so we do the best that we can to get in and get out and hopefully come out with profit when you work with OJ. But like I said, every commodity has its own personality and you have to take time to learn the personality of the commodity and track it over time before you jump in, and start trading. And so right now you're in that season of learning the personality of the commodities that you're drawn to and you really think are really cool. And you just, for whatever reason, you just like that commodity. And you'll see what I'm saying as you learn more and you play with the charts, you'll start to see which commodities you really enjoy and would like to, spend more time trading.
Would an
That's
example of that,
Go on.
sorry, would an
That's all right.
example of that be Mr. Delvin's December corn? He really likes December corn.
Correct.
Yeah.
That's how he started. He started with corn. He was labeled Mr. Corn because every single time his friends and his people that mentored him asked him what he was trading, he was always trading corn. And he spent a lot of time learning the personality of corn. And he And he trades it well because he spent that much time learning the personality of corn and what months is, you know, advantageous to trade in corn. And he just, and has done very well with it. And so, yeah, he's been crowned Mr. Corn because of it. Exactly. All right, Barbara.
You wanted to go to December.
Yes.
corn?
So December corn. So you notice how with this, how September, the volume is 270, open interest is 930, December is 1,000, volume open interest 6,000. So even when we had like previous ones like August, December was still high at 1,000 and 6,000. Okay. And so, like I was saying, it has nothing to do with the chronology of the months. You know, a lot of times the front month, which is the month that, you know, we're currently trading in, that tends to have the highest volume and open interest, but not all the time. So you should always come to this contracts page and choose which one has the largest volume and open interest and mark that chart up as a possible chart to enter and exit a trade from. Okay. All right. So
Let's go back to
Yep.
crude. We're gonna go into the October chart. So I'll just go over some of the tabs that's up here. When you come here, mine is already set on the bar chart, the bars on the screen, but you know, Mr. Johnny a lot uses candles a lot. So if you click right here where it says change bar type, and it will allow you to change the bar type. You can change it to candlestick open to close, and that's going to give you the candlesticks, because sometimes it's easier to see on the chart if you look at candlesticks versus the bars. So you are able to change that, your different views. If you want to do just black bars, you would click the first choice, OHLC bars. Then if you want to color them, you would do colored bars. And it was put it back predominantly how Mr. Wright does his. It will put it back like with color bars so you can see when it's resistance, when it's support, when it's red, and when it's green. So just so you know that.
1 second. And as far as the colors, I'm not quite sure. Do you guys know when the color's red or green? It meant that was a day. When it's red, it's a day where there was a lot of selling done that was predominant. And when the bar or the candlestick is green, that day of trading was predominantly a day of buying.
Okay.
Okay, so that's the difference between the green and the red. Okay.
Yeah.
All right. So study right here, it allows you to place certain indicators on your chart. Like this one that I have down here is the relative strength index that lets me know when it's headed in the direction of being oversold or overbought. So if it's higher than, if it's 70 or higher, it means it's overbought, and it's going to change directions, and it's going to go back down to a sale. It's going to begin to short out. As you can, if you can look here, you see where it went up here, and now it's going to eventually go back down. If you look here, if it's 30 or less, it means it's in an oversold area. It's going to eventually go back up. And the candles mirror that. So if you look here, you notice it started to go back up in an uptrend. So it kind of is an indicator to help you to know when to get in the market and when to get out. But that's just one of the indicators. There's a bunch of here. We know that Mr. Wright typically doesn't use indicators. Mr. Johnny does a lot, but Mr. Wright does not use indicators, but they are here just so you will know what they are. And the next tab is tools. And so these are very, very helpful. We do use these from your trend line, your horizontal line, and we'll get more into that. And then your your fib retracement, getting your 50% for your 1 month, your 3 month, and your 6 month. You can even write on the chart as well if you put text. You can draw using rectangles to point out your sideways channels. Like this one is a trend line. We'll get more into that. What I typically do on my contract specification page, because every market has margin and maintenance, its own set of margin and maintenance, I usually copy that information from that specification page right here. I usually copy just this so I can keep up with when the contract expires, how much it's going to cost me to get in, and how much I have to have in my account to maintain it every night. And how much is the point value, because in order to get into the market, you need to know how much it's going to cost you. And you need to know how you need to be able to keep the rules and not go over your 10%. So this is what this does. It comes in very handy. So if you click text, you can just paste it here and drop it here, or you can just type up here as well and click enter and it'll type it up there. And you right click and just delete it. So those are some of the tools. And then settings, we typically don't do too much with settings, nor compare. If you want to make your screen bigger, if you click the pop out chart, it'll just blow your screen up for you and make it bigger is what it will do. And your tools is right here to the down here on the far left. If you click here, if you click the arrow, it has your set of trend lines, your arrays, your horizontal line, vertical, trend channel. We usually use trend line and horizontal line, and we'll show you, why we use those particular ones. Then if you click here, this is your fib retracement. It just helps you be able to get your 50% as well. And you can do a text here. You can do rectangle, like if it's in a sideways channel, you click rectangle and drop it up here, and then you can put it there so you would know what this means. So it just helps you keep up with the story that chart is telling, basically. And if you right click on it, you can edit it out. You can change the color of it, put it for whatever color you want it to be. You can make your line really, really thin or medium or large. You can make it, dashes or solid. So you can kind of make it be what you want it to be, basically. And this just gives you another shape. If you're trying to point something out on a chart, you can use that as well. These are your arrows. If you want to put an arrow, I usually do this if I have gaps. If I see a gap, I usually place that like that so I can keep up. There's a gap right there. So I usually put that there because it helps you to see, that marker at some point is going to go back to that. So if I put those little, if I put those arrows there, I just know that's a gap. And these, of course, are very important. This is where you mark up your chart with your number 1, your number 2, and your number 3. So if you click the arrow and just hit number 1, you can just drop it right there. And you come back and you click, you do number 2, you drop it right there. You come back and click, you do number 3, you just do it continuously. You right click on it, you can clone it, give yourself another number 2 without coming back over there. So just little short stops. It has a lot of little short stops in here to help you trade. We typically don't use the rest of these, so but you can just click on them and go through them. We primarily don't use the rest of them.
So stop for 1 second. That 50%, when I first started, see that 50%? That's how I chose to get my 50% when I first started, and then I graduated to the Fibonacci. So it's really simple. Click on it, Barbara, and put it on the chart so that they can see from half moon to half moon how that works.
Okay.
So that instantly calculates the lowest and the highest.
Correct.
Right. For the year. On the yearly chart, it would do that. It pulls the figures from the yearly chart. So let me click on the yearly, and then you'll be able to, and then I'll do it and click 50% and just check that, and it's going to automatically pull them for you. and hit add. And
But they
see how,
can actually, they can fill those numbers in themselves on any.
yeah,
Mhm.
yeah, yes, you can. And it just dropped it here for you, right on the chart without you having to. You can put them in manually yourself if you want to. Just like you said, if you click here, you can write them in yourself on any of the time frames. So you can click here, just put 50% and just write them in here. And then it's going to give you the total and it's going to add it in for you. See how it put it down there for me? It'll add it in for you. So
That's a way that you can calculate your 50% without using a calculator, like getting the high, getting a calculator and doing the math. You
Yeah.
just put the numbers in there, you know, and once it tells you the number, just erase it and then take a horizontal and drop it into that number. And you automatically have your 50% for any chart.
Okay. So you do a 50% every chart.
Yes. So,
Okay.
yes, because Mr. Wright teaches us to do the 50% on the 6 month.
Okay.
And one of the things that Barbara and I have done is we do the 50% on our 1 month, our 3 month, and our 6 month. And then sometimes we go to a 5-year or 10-year chart so that we can see the story of that commodity. You know, before when we first started, everything was 6 months. We never went beyond the 6 month. We did all our 1, 2, 3 tops and bottoms and our 50% in 6 months. We never looked at not one other time frame. And then one day, one of the classes, they looked at the 1-year chart, a 5-year chart, you know, and a 1 month chart. And Barbara and I was like, oh my goodness, every chart has a different story. And so therefore, in order to get the whole picture of what this commodity's personality is like, it's good to do your 50% and look at the charts in different time frames so that you get to see how the commodity has been performing over a season of time.
Yeah.
Okay, yes.
Yeah.
And so it helps you, it becomes more, you see a whole picture instead of a fragmented one little sectional area, you
Yeah.
know, that
doesn't tell the
yeah,
whole
that
story.
correct.
Yeah.
May not be enough information for
Yeah.
you to trade it successfully because you did not see something that was on the 1 month or the 1-year chart. Like, okay, for instance, with corn, let's go to corn, Barbara. December corn, yes. All right. All right. Let's go to the 1-year chart in corn. Let's go to the 5-year chart in corn. Let's go to, this is 5-year.
yes, this is 5-year.
Go to 10. Go to 9 month. Go to 20-year. Okay. So somewhere along the line, go back to the 6 month. Because those arrows, those gray arrows that you have, those gray arrows, they meant,
They were some head and shoulders. They mean a couple of different things
oh, okay.
on this one. Like it had a head and shoulders. Yeah, that's primarily what they meant up here.
Go back to that one that you just were at just now.
Was it 1 year?
Because I was looking for gaps. Because I wanted to show them when corn did these two large spikes here on the right-hand side where it went up to above 620. It was filling in gaps.
Okay.
Okay, that was like on a 1-year chart or something. Okay, and so if you had not gone to the 1-year chart and seen those gaps,
Yeah.
you would not have known why it spiked up like that.
Yeah.
And as soon as it filled those gaps, it went back down.
Yeah.
Okay, because it's been in a strong downtrend and all of a sudden it spiked ridiculously. And you're like, why is it doing that? But Barbara and I saw that way ahead of time. We marked those gaps and we were waiting for corn to go back up and fill those gaps. And it did that in a hurry, you know? And so that's one of the things when you look at different time frames, you're able to see gaps. And so we will mark them with arrows, and sometimes we'll mark them with really tiny, skinny horizontal trend lines. And then we'll put a text there and, you know, and write in 1-year gap, you know, so that we know when it starts doing an uptrend that chances are it may go that high. So we know where to put our target.
Yeah.
You know, as far as when we want to exit the trade.
So quick question, wherever there are gaps, you are always at any given time looking for those gaps to be filled.
Absolutely. They may not be filled tomorrow, may not be filled next year, but they will be filled. It's the weirdest thing I've ever seen, but they get filled. Mr. Wright always teaches us charts do not like gaps, and he is 100% correct. I am seeing it with my natural eyes every day. You don't know when they're going to be filled, but they will be filled.
Yeah.
So that was my next question. So how would you set, like, for instance, set an alarm on something like that? How would you then it's almost like saying how would you then watch it? How would you be able to pick up on when it's coming back round?
Or when it's getting towards being filled, filling a gap.
Yeah.
Okay.
How do you know when that's coming around?
You don't know when that's coming around. The only thing you can do is follow the instructions that Mr. Wright and Mr. Johnny gives us about looking for 1, 2, 3 tops, 1, 2, 3 bottoms, and channels.
Okay, so that's how you work it out from there. Okay.
Correct. And when you see 1, 2, 3 tops and 1, 2, 3 bottoms and channels, and you see a potential trade forming with one of those formations, and you see that there's a gap in the direction of where the trade is going, then you're starting to contemplate that possibly this is the timing, you know, that if the trade continues past the number 2 to enter, then chances are it may be, you don't know for sure, you just get in the trade and follow the formations that we're taught to follow and to pay attention to, and pay attention to your stop loss as well, to make sure that you stay within no more than 10% you're risking on any trade of your balance in your account. And you just let the trade continue to flow and do what it does in the marketplace. But at least you have an idea of where it might go if you see a gap in the future of the direction that it's traveling in. Make sense?
Yeah, it does. Yeah, thank you.
Okay, did you want to go over trend lines next?
Yes. And let's do trend lines on a empty chart where we have not marked up. So it's a nice fresh.
Go to 25. I don't think I marked up this one.
Excellent, excellent.
All right, this is a good one.
Oh, wow.
Okay, this is crude oil November, micro November. Okay, so I'll start way back here and we see that, just imagine none of this have taken place.
Yeah.
And I'm gonna click here and I'm gonna lay my trend line and I'm gonna start at the bottom at the number 1, I'm gonna lay it across. So I know that when the market gets here, when it comes through my trend line, it's gonna let me know that it's gonna change directions if it breaks through the trend line at some point. And if you see, it did that, but then it went in a sideways, and it did change directions as well because it went back up and now it's coming back down. So the trend lines are very, very important because it helps you to be able to know when to get in or when to get out. If it breaks through your trend line, it's going to let you know that it's going to change directions. So that's the importance of putting trend lines. It helps you be able to, you already have to do a stop loss, but it's going to let you know really how to do your trailing stop, when to get out of that trade, and when to get into a trade. So it's that important. You always want to use trend lines, and Mr. Wright have taught us to use trend lines. He uses trend lines as well. So we started using our trend lines on every trade that we do. We put a trend line so we can see, oh, if it breaks this trend line, because if it doesn't break that trend line, it's going to keep going in that direction. If it don't, sometimes it doesn't break it right then. Sometimes it goes close to it, but it keeps going. It's going to keep going up, making its higher highs, or it's going to keep going down, making its lower lows. It's not until it breaks it that it's going to let you know that it's going to change directions. And in this case, it did. It went into sideways for a brief period. So it did. So it left from out of its down and went to a sideways. So as you can see, this is a really good example of one of how it broke it and it changed directions.
Can I ask a question to help me to understand
Yes.
about trend lines? So did I hear in a previous lesson that it has to hit the trend line three times?
Yes.
That's when you know that it's going to change direction or do something else.
No. He says it has to hit the trend line 3 times so that you know that is the trend that commodity is in. So
how does that relate to this then? Because I can see maybe it hit it.
So move the trend line over to the other, oh, all the way over, Barbara, to where, right over here. Line it up. Yeah, right there. So you see,
So this hit the trend line multiple times.
yes. So let me request it.
You got it.
Yes. All right. You always want to try and line up your trend line. Yeah, there you go. You want to line up your trend line. You don't want it passing through all of your bars in the middle. You want it to the very tip, you know?
Yeah.
Okay. So you see, it hit it here once, and even if you line it up a little bit more. It hit it once, 2, 3, 4, several. So it's an uptrend.
Yeah.
Okay. So he's just saying, if if it just hits it once or twice, you're not quite sure it's in an uptrend.
Yeah.
You understand? It could have still been in a channel, a sideways channel right here, and kept doing the sideways channel. But because it hit it several times, you can look at this and say, okay, this is an uptrend. And so therefore, you've put your diagonal trend line in here, showing it's an uptrend. So you notice right in this section right here,
Yeah.
it broke the trend line.
Yeah.
So now the trend is possibly changing.
Mm-hmm.
And so therefore, at this point, you've got to pay attention, because if you're in a buying situation and
Yeah.
you're right here in the trade,
Yeah.
breaks the trend line, you better be watching to get out of that, or shortening your trailing stop to get out of the trade, because if it continue going down, you're going to lose all of your profit if you don't have a really nice tight trailing stop loss to stop the hemorrhage on your trade. Because
Can I
all
just
of this,
ask a question then?
huh?
A
Yes.
quick question. Now, first of all, does that trend line have to be over a certain period of time?
No, it's really, no, it has to do, because you got to remember, this is on a 6-month time frame.
Okay.
If we're in a 1 month, it's completely a different look on a 1 month.
Okay.
So it depends on what time frame. See what it looks like on a 1 month,
Yeah.
and it's doing something, it's showing you something completely different.
Okay. So can I ask the second question being, is that when it breaks the trend line, I know you have a stop loss in place. Can you not just stop yourself out, because you can kind of see what it's going to do?
Yes, you can. But Mr.
Okay.
Wright, he teaches to shorten your stop loss and let the stop loss take you out of the trade.
Okay.
He never just like closes his trades out at market.
Is there a difference between closing your trade out of market and being stopped out?
No, there's no difference. It's just a style that he prefers. He prefers
Okay.
to shorten his stop loss.
Yeah.
And I believe the reason he does that is because at the last minute, sometimes this trade will end up going back into the trend again and start going higher.
Yeah.
And if you stopped yourself out and not just shorten your stop loss to minimize your risk, when it turns and it continues to go back in the uptrend, you would have lost the opportunity to continue in the trade if you just got out. And I think that's the primary reason he shortens his stop loss, to control how much loss that he will incur in a trade versus just getting out, closing at market and completely getting out. Because if the trade turns around and continues in its trend, he will at least continue to have profits, because he would have minimized his risk, but he would not have minimized his profits.
I totally get that. I totally get that.
So
You
that's
just
why
never know what the markets is going to do.
Correct.
Yeah.
And so the more experienced person like he is, he wants to continue to maximize his profits and minimize his risk and stay in the trade as long as he can. And so that's why he allows the market to take him out of the trade instead of him taking himself out.
So that's a little bit like hedging.
Yeah.
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 Okay. Awesome. Okay, so let's
Do you want to do 1, 2, 3 tops or the horizontal line with 50%? Which one you want to do next?
Yes, we're gonna do 50%, and then we'll do the 1, 2, 3 tops, 1, 2, 3 bottoms. So
Okay.
Yeah.
All right. Did you want me to do 50%?
yeah, you go ahead and do
Okay.
50%.
Okay. So I'm on a 6-month chart, so I'm gonna see what my 50% is. Now I use my Fibonacci to get my 50%. Of course, you can calculate the high on the chart, add it to the low, and then divide it by 2, and it'll give you the same number. But I use my tools over here to get mine. So when you click on your time frame for 6 months, it's going to put you right at the beginning of the lowest point or the beginning of the highest. It puts you right there at it for 6-month time frame. If you look down here, it'll put you there for your 6 month. So when you click, I'm going to click here and click fib retracement.
Mhm.
When I do, I'm going to bring it right down here to the bottom, right where the bar ends, right above the little half moon, and I'm going to click on it and drag it up. And when I do, I'm going to stop it right at the top of the bar, right before the top of the half moon. If you look here, it's going to give you your 50% is 74.40. And then I come back here and get my horizontal line, and I usually drop it here at 74.40. But sometimes if you don't hit right on top of it, it may give you a different number. So I just put it there. Then I right click on it, because remember, you can put it whatever color you want it to be. So it's the number is 74.40. So I'm gonna come up here and change it to 74.40. If you want it to be, I use mine for certain colors. So I know purple is always my 6 month. You can put whatever color you want it to be. You can make your line really thin or medium or large. I like mine to be large, and I click apply. When I do, it's going to move my price to 70.40. So on my charts, I know purple is 6 month. Whenever I see a purple line, I know that stands for 6 months, 50%. Now we have, different time frames that we look at: 1 month, 3 months, and 6. I typically put all of mine on one chart. So I usually I just put all my colors together. So I'm gonna do the 3 month, and it's gonna drop me right here around the 3 month time frame. So this is my lowest on the chart. I'm gonna take it up to the highest, and I'm gonna come back here and click this again. I'm gonna drop it here, drag it up, and I'm gonna put my horizontal right here, 75.11. Sometimes I can get it right at the number, then sometimes I can't. I'm gonna right click on it. I'm gonna change this to 75.11. And I'm gonna change my color, so I know whenever I see this on my chart, I automatically know that's my 3 month. And I'm gonna take that off again. I'm gonna click on my 1 month. Then I'm gonna do the same thing. This time, if you look at the time frame, you don't have a half moon down here, it's up top. So it's letting you know, go from high to low instead of low to high, because you don't have any half moon down here. So your next half moon is up top, and it's so tiny you can barely see it, but on 1 month, but I can make it bigger for you and bring it down. And I'm gonna do the same thing. I'm gonna drop it on top of it, 80.37. That time I got it right on it. But I usually make my color different for my 1 month. And that's gonna give me that. When I come back to my 6 month, I have all my 50% on my one chart. And I want these up here because price is gonna go back here. So it's important when you gotta have a target. So this is my 50% is my target in the market. That's why I wanted to go to, when I get into trade, I wanted to go to that one of these 50%. So that's gonna be my target. Whether I'm doing
you want to
futures
go
or
to
options.
50%. Sorry.
Right. So in this case, this is already right here at the 1 month 50%. So of course I wouldn't make this my target, especially I'm in a uptrend. But I could very well say, well, I want the 6 month to be my target, or I want the 3 month to be my target. So these will be your targets. And if you look especially at options, that's what people typically use as their targets, is the 50%. That's the purpose. It's going to trade back to that. So that's how you do. That's one way to do your 50%. I know on the call we usually just add the lowest point with the highest, and then divide that by 2, and it gives you the same number for each time frame. So it's just 2 different ways you can use your fib tool, or you can calculate it like we do with the highest on the chart and the lowest, add those together and divide it and get the same number.
Can I
Okay.
just ask a quick question at this point? So the 50% retracement helps you to identify a good place to enter the market at.
That's
Or the
going to
right
be your target. You're going to enter the market at your number 2, remember, and that's what Dr. Melba's going to do next with the 1, 2,
Yeah.
and 3. The 50% is your target, because when
Yeah.
you enter, you got to have a place where you want the price to go to. So
Yeah.
this is the purpose of your 50%, because they always going to trade back to that 50%. It may not be the exact time that you think it's going to be, but it's going to go back there. It
So
don't
you
mean
want it to go back
it
to
don't mean that it's
80.
going to necessarily hit it within that month. It may be 3 months, but it's going to go back there. So this is always going to be your target. You got to have an entry, a stop loss, and a target. So she's going to go over that next with the 1, 2, and 3.
You guys are understanding so far?
Yeah,
Yeah.
I'm trying to get it. So when you say target, so that's where you want the price to be.
Right, that's your profit. Like
That's the
if
profit,
you said
okay.
target, say for instance, if I want it to come here at 74.40 and I'm entering up here, let's just say I'm entering here. From here to here, it's gonna be all of this is profit for me. And if it goes down, if it keeps trading down, then that's even more profit. But say for instance, if it gets here at my entry, then it turns around and it goes back up. This is my stop loss up here somewhere. So that means
Okay.
it turned around on me. So it went
Yeah.
back to my stop loss. So I would be going short if I wanted to do the 6 month 50%. I would be going short the market. But you always got to have a stop loss just in case it turns around and goes in the opposite direction. So your 50% is going to be your target. That's going to be your profit. Because as long as it keeps going in this direction, even if I wanted to go further, go through that, that's all that's profit for me. But in case it turns around, I have a stop loss. And I'm going to trail it all the way through however many points. I'm going to trail it as well to keep my loss at a minimum. Okay. So
Makes sense?
any more
Yeah.
questions? Okay. All right.
Okay. So as far as now marking up our charts with 1, 2, 3 tops, 1, 2, 3 bottoms, knowing where to enter, knowing where to possibly exit, and how to set your stop loss is what we're going to go over. Okay. So from looking at this, you see the half moon is on the top. And so the half moon is always a number 1. So we're going to go over here to our tools. Click the 1, and we're going to label it 1. So then it went down here to a number 2, and then it went up here to a number 3. So you're going to click. This is a lower low. Number 2, and this is a lower high right here as a number 3. So
Yeah.
we can all see that, correct?
Yeah.
Okay. So this gives us a 1, 2, 3 top because it's on the top of the chart.
Yep.
And is progressing hopefully into a downtrend, or the market is starting to turn to go short because it's been going long all of this time until it made this number 1. Okay. So the next thing we're going to look for is where we're going to enter. So I'm going to erase this 50% right here. So everything's a little bit more clearer. So Mr. Wright teaches us we have to enter the trade below the number 2. And so right about here. And I always put my entry as pink. You can put your entry whatever you color you'd like to color your chart. And then he teaches us to set our stop loss right above 3.
So right above the 3.
Right above the 3.
So is there a rhyme or reason? You said right above, is it 2 points, 1 point, half a point, or is it just an estimation?
It's just an estimation.
Okay.
okay? And the reason that is you've got to remember, the reason number 2 is this was a resistance. The reason the market didn't go higher than number 1, there's something somewhere, somehow that's stopping it from going higher than number 1 in this time and season. And so this is a point of resistance. When it came down to the number 2, there was something that stopped it from going any further than number 2. And so that is a point of support. Then it went up to number 3, and something stopped it from going any further than number 3, and that was resistance. And so therefore, if the market's going to come back up to this number 3 point, chances are it may not go through the number 3, okay? Because there's an area of resistance there stopping it from going higher than number 3. That's why it went down when it went up to number 3, it stopped and went back down and broke its last support at number 2 and made a new support, which is this new number 2. So let's mark that. So this is another number 2 right here. And it's going back up again to make another number 3. Okay, and so let's temporarily label that as its new number 3 right here. But it may go a little bit, when the market opens again, it may go a little bit higher. As long as
That'll
it
be
doesn't go
number
higher
one.
than, as long as it doesn't go higher than this number 3, we're still functioning in a 1, 2, 3 top, and the market is going short. If this market, this number 3 right here, when the market opens again for this week, if it keeps going up and passes this number 3, then it's no longer a 1, 2, 3 top, but it possibly can be going, it just retraced for a minute and it's going back long again in the same direction it was going along, all along here. And the reason your stop loss is right above the number 3 is if it goes above the number 3, the market has changed possibly, and you don't want to be going short because now the market looks like it's possibly continuing to go long like it's been all along. And that's why you're right above the number 3. Make sense? If you're right on top of the number 3 or right below it, it could be retesting this resistance right here, and it's going to hit your stop loss and take your money, when all it was doing was trying to test a resistance point, but your stop loss was, it was too short. You understand? And so it got hit and took you out of the trade.
I think that's a perfect explanation of understanding. So ideally, what you want it to continue doing is going down.
Correct. You wanted to keep making 2s and 3s all the way down.
Yeah.
Okay.
Okay.
Once it's making 2s and 3s all the way down, then you're in a safe place and you're making profit.
So ideally, what a perfect trade will be a trade that goes nowhere near your stop loss.
Correct. It can come close to it, but it should
Yeah.
not. Yeah. Once it doesn't hit your stop loss, you're still in the trade and you're still possibly making profit.
Yeah.
Correct. Once it hits your stop loss, you're out of the trade and you have to find the next number 2 to get back in the trade if the trade is continuing to make 1s and making 2s and 3s.
And so ideally it needs to stay where your 2s are.
Correct. All right. So we got it here.
Mm-hmm.
Okay. So the market came down. You entered a trade right here when it triggered at your number 2.
Yeah.
Then it came down a little bit. You had a little bit of profit. Then it went back up to make another number 3. And possibly it's going to come back down again and make another number 2. Now, right here is your target, which is your 6-month, 50%.
Yeah.
So we're looking for it to come down to here. And then after here, nobody knows what it's going to do. So you have to pay attention and possibly set an alert to pay attention to the trade. Because once it hits that 7.74.40, you want to know and pay attention because it could turn around and go back into the uptrend and you want to minimize the loss of any profit. We call it securing your bag. So that's when you shorten your stop loss as much as possible so that you keep as much profit in your bank account as
Okay, so
possible.
can I ask a quick question then? So when you say you shorten your stop loss, which is above the 3, do you bring it down?
Yes,
Okay.
because once the trade is down here, the whole time you're in this trade, the distance between 81.71 minus 77.87,
Mhm.
that's your stop loss amount.
Yeah.
That's the amount that you're going to put in as your trailing stop loss for this trade. Okay. So let's look at this trade for a minute. Because this is one of the things Barbara and we do every week. When you look at where you're going to enter and where you look at where your stop loss is going to be, and when you look at where your target is, if your stop loss is larger than your profit from entry to target, it's not a good trade. We only trade things that are 2 to 1. So this 50% has to be down here for Barbara and I to enter a trade like this. Like when we calculate the 50%, it's got to be down here. For us to carry this type of stop loss, we got to make some money between where we enter and where we exit at the 50%. Do you guys understand that?
I don't get that bit, no.
Okay, let's go over it again because this is really important. Let me remove all of these twos because you have to be able to see this because this is logical sense that you have to be able to understand.
Right. To help me to understand, you've got your 50% retracement lines, which are your target lines.
Correct.
Right. So
All
can we
right.
take it from there? Because we've calculated our 50% retracement for 6 months, for 1 month, maybe for 3 months.
Correct. All right. And so the 6 month 50% is the one that Mr. Wright teaches us to trade off of. And so this 6 month 50% is up here.
Yeah.
At 74.40, I think it was at. This is where you're entering. This is where you're possibly exiting to take profit. But look at your stop loss. It's larger than your profit margin.
You want me to do the math for them, the numbers, so they'll see?
Yes.
Let me click on the price. Oh, let me get the point value and I'll do the numbers for you. 100, is it $100?
Yes,
Okay.
100, yeah, $100 per point value.
Okay.
So can I just ask a question while Barbara's doing that calculation? So
Yes,
even if it goes for your 50% retracement line, is that not a good thing?
Even if it does what you said there?
If it goes through your 50% retracement, the market continues trading down. Isn't that what you want it to do?
It can, but there's no surety that it will. So you
Okay.
always think to yourself, all the market may give me, the maximum that it may give me is the 50% retracement that we're taught by Mr. Wright and Mr. Johnny.
Yeah.
Okay. If it goes beyond that, hooray, Yahoo, we celebrate. But do not trade like it's going to go beyond that when you first start. You can get in lots of trouble because a lot of times it goes to the 50% and then it turns around and goes back in the same flow that it's been going for months.
So can I just get some clarity? When it does hit that 50% and it starts going back in the same direction it's been going, does that mean you're losing money at that point?
Correct.
Okay.
Because all of the money that you entered the trade here,
yeah,
came down to 50%. Anything from this pink line to this purple line is profit.
Yeah.
And so when it turns around and goes back, it's eating up your profit.
Yeah.
And when it gets back here, you're to zero. When you get here, you're at a negative number, negative number, negative number, negative number. You're out of the trade. It hit your stop loss.
Okay, but it doesn't hit your stop loss and it goes back down again. You're still in the trade.
Correct.
Okay.
All right. But if you have a trailing stop loss, like this stop loss, when you're down here,
Mhm.
this stop loss has moved down to here.
So
The
how do you
same-
set your
the same-
trailing stop loss? Is it a physical movement? You do it yourself?
No, you said when you guys get to the level where you're ready to set up like your account with TradeStation and
Mhm.
you start learning how to use their portal, you
Mhm.
know, at that point, we may do a class on how to set up trailing stop losses and things
Okay.
like that and how to calculate it. But
Okay.
for right now, when you're paper trading, yeah, you know, you're knowing that whatever this amount is right here between the
Mhm.
2 and the 3 that you set up, okay, that amount is trailing this entire trade as it is
Mhm.
progressing into profit.
Yeah.
Because
So I'm a little bit lost.
Mhm.
Oh. People said so many things all at once.
Because
Okay.
the reason you have a stop loss is if the trade goes in the opposite direction, it stops
Mhm.
it from eating all of your profit that you've gained prior to where the market turned and started going in the opposite direction from which you're expecting it to continue to flow in.
But with all the alerts that you do set up, then if that then starts to change, surely then you said you could go back and then tighten your stop loss to not lose all that profit that you made.
Correct. Absolutely, you can do that. And a lot of times when you do that, you'll get stopped out of the trade because it needs the breathing room, you know what I'm saying,
Yeah.
to do what the market wants to do. But if you're not sure if it's going to eat up all of your profit, yes, you will shorten your stop loss and keep some of your profit and live to trade another day. And if it decides to continue to go in the same direction, you get back in again and set a new stop loss and keep making profit. But at least you secured your bag and kept some
Mhm.
of your profit and not let the market eat up everything it gave you.
Mm.
Okay, you ready for the numbers?
Yes.
Okay, so if I wanted to know how much I was risking in the market as far as stop loss, I'm gonna take my number 3 and I'm gonna subtract that from my entry. So 81.56 minus 77.87 gives you 3.84 in points, where each market has its own point value. So now I have to multiply 3.84 times 100. That's going to give me $384. That's how much I'm risking. But then you also have to keep the rules of not risking more than 10% of your overall account. So what's $384 times 10? That comes out to be
3,840.
so you would need an account with $3,840 in it. Now you also have to consider your margin and your maintenance. So you take that and you add it with your margin and your maintenance, which is $638. That's how much you have to have in your account to get in the trade. Then your maintenance is the $580. That's how much you need at the end of each trading day to stay in the trade. So if I take that 384 times 100, that is
So they would need $3,840, right?
$3,840
Mhm.
plus the 638, 3,840 plus 638 plus that's 580, that's $5,058. That's what you would need in order to successfully get in this trade and stay in it. That's what you would need. Now let's look at how much your profit would be. Your entry 77.87 minus 74.44 gives you $343. So your stop loss amount is greater than your target. So this would not be a trade you would want to get in because you're only going to make $343, but you're risking 384 to make $343. That's not a good trade to get in. So that's why you have to do the math in every trade to keep the rules and only risk no more than 10%. But you don't want to risk more to make less.
Yeah.
so this wouldn't be a trade that you would want to get into.
So you ladies do this for every trade that you're looking at?
You have to do this for
Wow.
every trade that you're looking at, because every trade is an individual business. Every
Yeah.
market is an individual business. So you never want to risk more than 10%.
Okay.
And you have to write it down. You notice how I'm making notes for everything she's saying?
Yeah.
Because you're going to forget. When the alert goes off and you look at a chart, everything has to be written on the chart where you know where you're getting in, where you're getting out, what your
Yeah.
risk is, where your profit is, what your trailing stop is. My trailing stop for this is going to be 3.84, and that's what you're going to put into TradeStation as a trailing stop amount. Do that number, 3.84. And then you're going to give them your target is where you're exiting. This is going to be your entry. All of that has to be put into TradeStation in order for you to execute a trade. Or you have to give it to someone at the trade desk, that's going to put it in their system for you if you're going to call in a trade the way Mr. Wright does. So it has to be written out, and you have to have your plan written out, and you stick to your plan and you execute it. But it has to be written. You have to think it out, you have to write it out, and you have to execute it, and you stick to your plan. The only time you change this plan is if you're losing money and you got to shorten this stop loss to stop the hemorrhage in your account, or to secure your bag and take some profit home before the end of the day. And I think we'll stop here for the night, because I think we've given you plenty to play with your charts, because the 1, 2, 3 top and the 1, 2, 3 bottom works the same exact way. It's no different. It's just in two opposite ends of the chart. But questions, yes, you can ask questions. We'll answer questions.
I haven't got a question, but if I can make a statement, my admiration levels for you ladies have now gone right through the stratospheres. I've just sent Tanya a message that, wow. I'm impressed.
And we do this separately, and then we come together once a week, Barbara and we compare our charts and different markets that we're looking at. And sometimes when we see stuff that's really juicy, we'll post it to see if anybody else is seeing what we're seeing, or if Mr. Wright is seeing, or Mr. Johnny is seeing what we're seeing. And if it's an area for us to keep an eye on, or if there's an area where they can see that we can't see because we're novices, and he'll help us. Like right here, like in the past, I would have gotten in here, but Mr. Wright teaches us to look over here on this side, and he says this is a strong area of support, and so he teaches you don't want to enter in a strong area of support. You need to come down a little bit lower to make sure it clears this area. Because it may turn around and just bounce back up and continue going, because it can't break through this strong area of support on the left. So you learn little nuances like that, as time goes on. But it took me a year for him to teach me that. And you've learned it now within your first couple of months, so like I said, acceleration is upon us. You guys are learning things faster than Barbara and I did.
Yes, you are.
Are you sure?
I'm positive.
Positive.
It's just about it sticking, to be fair, because with that little thing you just mentioned now, Dr. Melba, I'm looking at it like, what did you say?
Yeah.
So
no, I feel like for me, it's about just going back. This has been so valuable. And it's just about going back and listening to
You just have repetition.
over and over
Like
again.
they say, repetition is the mother of learning. You just have to keep doing it over and over again. It's how you get it. It's how we did it. We watch. I can't tell you how many times we watched the videos over and over again, and just came to the charts, put in 1, 2, 3s, 1, 2, 3s, 50%, 1, 2, 3s, and we just learned as we went along. It literally took us well over a year to really be where we're at now. But it was through repetition.
Yeah.
This has been so valuable. I'm going to watch it every day. because this
Yeah,
is
it will
as
help
much as
you. It will
as
help.
much as I thought I understood this, the clarity that has been brought
Yeah,
through
that's
this,
changed now.
and literally it's like a cake. You've got all the different ingredients, and you're now putting it together to actually
Yeah.
make a cake that you can bake.
Right, right.
Awesome.
Yeah.
Very good. I'm so glad, like Mr. Wright says, we added value
You sure
to
did.
your trading careers. And so we'll
The
Thank you
student
both.
became the
I
teacher. I
could
love
kiss you
that.
both. I can't wait to meet both of you.
That's what I was thinking. I wish you guys lived down the road. That'd be so good. Oh,
Thank you both. I'll go ahead and stop the recording.